Why most people struggle until they save their first $2,000. You ever notice how life only falls apart when your bank account is at like $47? Your car makes a weird noise. Your dog needs to go to the vet. Your rent auto draft hits a day early. And suddenly you're juggling transfers, praying nothing overdrafts, checking your balance 6 times a day. And you tell yourself, once I get paid Friday, I'll be fine. But then Friday comes, and you're not fine. If that feels painfully familiar, yeah, that's literally most people. My name is Adam, and I spend way too much time thinking about personal finance and why smart, hardworking people still feel broke all the time. If you're constantly stressed about money, living paycheck to paycheck, and wondering why you can't seem to get ahead no matter how hard you try, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Today we're talking about the most underrated milestone in personal finance.
Your first $2,000 saved. Not $100,000. $2,000. Here's the thing. Until you hit that number, the game is completely different. Let's challenge a common assumption right away. Most people think they struggle because they don't make enough money. And yes, income matters. But here's what most people don't realize. According to the Federal Reserve, a large percentage of Americans would struggle to cover a $400 emergency without borrowing or selling something. $400, that's a car repair. That's a minor medical bill. That's one bad week. This isn't just about low income, it's about zero buffer. And without a buffer, every expense feels like a crisis. Now, you might be thinking, why $2,000? Why not $1,000? Because $1,000 helps. But $2,000 changes behavior. Let me explain the math. Imagine your monthly essential expenses look like this. Rent, $1,200. Utilities, $200. Groceries, $500. Insurance, $20. Gas plus transportation, $300. That's $2,400 a month. If you lose your job tomorrow and you have $300 in your account, you panic. If you have $2,000, you have almost a full month of survival covered. That breathing room changes how you think. And money is 50% math and 50% psychology. There's a concept in behavioral economics called scarcity mindset. When you're low on resources, your brain goes into short-term survival mode. You don't think about next year. You think about next Friday. Researchers have shown that financial scarcity actually reduces cognitive bandwidth, meaning it's harder to make good decisions when you're stressed about money. So when you're broke, you swipe the credit card because you have to. Ignore bills because it's overwhelming. Avoid looking at your bank app. Make short-term decisions that create long-term damage. And then you blame yourself. But it's not just discipline. It's design. You're trying to make long-term financial decisions with a brain stuck in emergency mode. Let's walk through a realistic example. You have $0 saved. Your car needs $800 in repairs. You put it on a credit card at 24% interest. If you only make minimum payments, that $800 could cost you over $1,000 by the time it's paid off. Now imagine that happens 3 times in a year. Car repair, $800. Medical bill, $600. Emergency travel, $700. That's $2,100. But because you didn't have $2,000 saved, it turns into maybe $2,700 or more with interest. This is where it gets really interesting. The absence of $2,000 can cost you $5,000 plus over a few years. Not because you're irresponsible, but because you're unprotected. When you hit $2,000, something weird happens. You stop reacting. You start choosing. You can say no to toxic jobs because you're not desperate. Avoid payday loans. Wait for better deals instead of panic buying. Sleep better. And look, that matters. According to data from the American Psychological Association, money is consistently reported as one of the top stressors for adults. Financial stress affects sleep, relationships, and job performance. Saving $2,000 doesn't make you rich. It makes you stable. And stability is power.